All right. Welcome to the first live stream. Welcome to Brennergy. This is Brennergy. We are day trading the S&P 500 futures. Hope you're doing well. It's a beautiful day here in sunny San Diego. It's a little bit chilly, and I got my window open because I'm loving the breeze. But I got the fur coat and the beanie on. So, just trying to get some contrast there. So we're looking at the S&P 500 futures. Very interesting what's going on now, because we've got the daily chart. So here's the daily chart of the S&P 500. And as you can see, yesterday we had this massive sell-off, about 85-point sell-off, okay? And after a move that big, I'd be expecting some more selling, right? I would expect that a big bear bar like that on the daily chart would attract some sellers. But if you I just drew this trend line, right? All I did is started this first bull bar that started the rally back in October, okay? And I just connected that to the lows, right? And as you can see yesterday, the market sold off and stopped right at that point, which tells me that there were buyers waiting. The bulls were waiting right at that trend line. And that sell-off did not lessen the confidence of the bulls. So that's one possibility. Another possibility is that we will sell off some more, and that this is a 50%, this is just a 50% pullback. So 50% pullbacks are commonplace all day long in every market, on every chart. Just go ahead and see it. You can see it on any time frame. 50% pullbacks, the most important form of support and resistance. So maybe this is just a 50% pullback of the start of a longer sell-off, and that the bears are just loading up. You can see the tail on the bar. There is some selling. If we go back to the 5-minute chart, yeah, there has been some selling since the open. But as you can also see, if we switch to the ETH, which I was looking at starting last night, as soon as we sold off, we started rallying, okay? And I actually took a long position as I saw this. I watched it for a few hours, and then before bed, I took a long position and woke up, made money, which is awesome. It's always a good feeling. So I took a long trade there. That worked out. And then when I sat down this morning, I drew these two lines, right? So we've got the bear case and the bull case. You always want to be practicing counter logic, right? If you're placing trades and you're not considering the other side, you are setting yourself up for failure. It's very important to be able to consider both sides of any trade. And if you understand both sides and then you're still holding on your premise, then now you've got a strong premise. So I've got two ideas, right? Two hypotheses. This is one, that big sell-off yesterday, we're pulling back, and now we're forming a bear channel, which is a very common pattern, right? A spike, a pullback, and then a channel down. So that's one possibility. At the moment, it looks like that's what's going on. And then if that happens, we could expect more down. That's the red line, okay? Bear case. What's the bull case? The bull case is, as I was showing you, the bull case would be all this was some profit taking and a pullback to this bull trend line, and that the bulls were waiting here and will win and continue this bull rally up and have more of this, right? And we've got other prices here to test. We've got the all-time high over here. And yeah, there's just a lot of prices up there to test. However, if you saw this, okay, would you be confident in buying? And I don't like the idea of buying with that much selling to the left. So I did I did buy and get long overnight, but that was a pretty small position. And, I really wanted to see what was going to happen on the open today. And all we've done today since the open, as you can see, is we've just been in this trading range. We are in a trading range environment. You got to know what kind of environment you're in if you want to trade successfully. And the environment you're in will dictate how you trade. So if you're in a trading range environment, you want to bet on reversals and enter at the extreme. So this red box shows that I sold here. right? And that's because I just drew that line when I got in. And then as soon as we started to approach that line, I'm like, you know what? I think we're in a trading range environment. So I sold that and then immediately made money on that trade, which was awesome. And I used to be terrible at trading reversals, but now I'm really starting to get the hang of it. So that was fun. It's cool when the trade works out immediately. You should not expect that to happen, but it's nice when it does. So there's really not much opportunity here. I mean, look at every bar, every other bar we're reversing. Bear bar, bull bar, bear bar, bull bar, right? Black, white, black, white. The black is red. Okay, those are bear bars, and the white is green. Those are bull bars. I just like to keep it black and white because it, has me be less emotional, which is actually much better for trading. So in a trading range, you spend a lot of time around the average price. The blue line is the average price, and this is exactly what you can expect from a trading range, but you really don't want to do anything in the middle because it's a no man's land, right? It's about the middle of the trading range. It's like, just stay away. There's really nothing. It's just too easy to lose money there. And if you do enter a position in this zone, you'll probably have to sit there and wait a while for anything to happen. So it's just a terrible place to enter in the middle of a trading range, like the worst possible thing. When you're trading, what you want is an edge, right? You want probability on your side. And when you're in the, first of all, trading range is almost 50-50 probability. That's what keeps reversing, right? There's two-sided trading. And if you are entering in the middle of a trading range, that's like the worst of the worst. So just stay away from the middle. And instead, as long as we continue in this structure of a trading range like this, you want to buy or sell at the extremes, right? So this would be an example of a good entry. Or, right, if you saw this big move down, right, and then you bought there, right? So big move down, betting on a failed breakout and a reversal. So that's exactly what you had here, right? Big move down, failed breakout, and a reversal. So that means you would buy here expecting a reversal in the opposite direction. So every time there is a strong move in one direction, if you're in a good location, meaning at one of the extremes near the top or the bottom, the strategy I like is buy low, sell high, and scalp. That means, for me, that means ATR equals profit target. ATR is just the average bar size, average true range, right? And you can see on the bottom of my screen, I have this is a 5. Yeah, 5. So this is telling me of the last 5 bars, what's the average size? The average size is 3.8. Okay, so a scalp would be, you round down to say 3. Okay, so you go for a 3-point scalp and you would enter around here or you would enter around here. But as I said, we're kind of in this no man's land, right? No man's land is where you get killed. You stay the fuck away from that. I wish there was more going on, but most days are pretty boring in the world of trading. If you actually trade, most days are pretty boring. So you get used to it. But we want more of these. We want some more of these. Let's get some more of these. Let's get some more of these. Tell my killers with the $100 bills. Come on. Okay, this is boring, and I think we should do something else. Sun's starting to peek through the window there. Okay, I'm gonna end this stream now. This was a good test.